What's up, millennials? In this video we're going to talk about three different things. First of all, we're going to take a look at what the benefits are of the merger between Teladoc and Livongo according to these two companies. Then secondly, we're going to take a look at what other professionals outside of these companies, outside of Teladoc and Livongo, have to say about this merger. And then third, I'm going to give you a little bonus tip that can be very interesting, especially for the people who like Livongo as a company, but also the team behind Livongo. So that's going to be an interesting one. All right, so let's just hop right into it. Okay, so let's first talk about what the benefits are of this merger according to Teladoc and Livongo. And scrolling through this investor presentation, which I'm going to link down below in the description, there are basically two major benefits of this merger. We're going to talk about these two. Now, first of all, the number one reason is that they are going to become the global leader in virtual care. For me, this personally is probably one of the most important factors because I personally really like investing in companies that are the number one in their niche, right? If you, for example, think about high-end smartphones, you usually think about Apple. If you think about video streaming, for example, you usually think about Netflix. If you think about electric vehicles, you usually think about Tesla. Now, I believe that Teladoc actually could become the Tesla of telehealth, the number one company in this industry, all right? The second thing is also over here. That this merger is going to combine two leading high-growth companies built for scale that have, watch this, complementary cultures. What I look at, I see this kind of as a puzzle, right? It's almost like both companies, Teladoc and Livongo, have like 60% of the entire puzzle. Even though some of these puzzle pieces overlap with each other, they can combine their pieces together and finish the puzzle that way. Not sure if you like that analogy. If not, well, maybe give me a better analogy in the comments, but I kind of see it a little bit like this. So let's just take a look at what both companies have to offer to each other. Let's first take a look at Teladoc, all right? Let's see, over here. So Teladoc basically has multiple things to offer, and a few of the most important ones, according to me, are the tech-enabled operators at scale, the multi-specialty physician networks, and the global distribution channels. So what this looks like to me is that Teladoc has more or less the infrastructure that can be used to pretty much become the leader in this telehealth industry. And then if we take a look at what Livongo has to offer, well, we can see a few things here as well. First of all, they have technology to transform the experience of living with a chronic condition. They also have a consumer-first, data-driven health experience, and they have deep consumer data and also artificial intelligence. So basically what this looks like is they have the technology that can be implemented within Teladoc's infrastructure. So according to me, this looks like a very beautiful puzzle that's going to be pieced together. So basically what these two companies are trying to achieve is something that's called whole person care. What does that mean? Well, let's go to another page, page 16 over here in the investor presentation. Here you basically can see that Teladoc and Livongo together can make sure that they can take care of one person wholly. They can pretty much look at different aspects of the health journey of a single person, right? Let's just take a look at this health journey of a woman called Claire. She's living with hypertension. And let's just go through this together, okay? So first it says, okay, there's an annual exam with a Teladoc primary care physician. They discussed her medical history, her nutrition, her stress levels. Then a Teladoc physician consults with Claire, reviews her lab results, diagnoses a high blood pressure. Then they create a health plan. Then she gets a Livongo blood pressure monitor and a cuff, which are shipped to her home, which are part of the easy-to-use health kit. She uses this blood pressure monitor and the cuff and they are going to monitor the hypertension. Then Livongo has something called health nudges, which encourage Claire to stay on track. Based on the Livongo clinical data that Claire shares, Teladoc physician writes a recipe for blood pressure medication. Then, for help with a healthier diet, Claire consults a Teladoc nutritionist. Then, Claire is diagnosed with a sinus infection, so a Teladoc physician writes a recipe and advises on over-the-counter medication risks related to hypertension. Further on, to manage stress, Claire consults a Teladoc mental health therapist. And then, in the end, with the support of the care team, ongoing blood pressure monitoring and health nudges, Claire can achieve a target weight and blood pressure, and she can continue her healthy habits. So basically what you can see over here is that these two companies together can make sure or can take care of the entire health journey of a person, right? Of course, there are going to be some other health issues that will not be able to be treated this way, but you can see that in so many aspects of a person's life, Teladoc and Livongo can use their services, their technology, to take care of an entire health journey together, right? And this way, in the end, well, Claire, in this example, because it's an example, of course, she didn't have to go to the physician's office once. It took her less time, it took her less money as well. Now, usually when I read the comments below videos about Teladoc, then a lot of people are asking, is this merger actually good for investors as well? Well, personally, I do think so. Especially if you're investing for the long term, right? Because in the short term, anything can happen, especially with the current health situation that we're in, also with the elections, which all lead to uncertainty in the market. So if the market is going down, then Teladoc is also going to come down as well. But personally, I would see that as a buying opportunity. Of course, that's not financial advice because I'm not a financial advisor, but I do think that this merger is great for a couple of reasons. Basically 3 reasons, right? First of all, it's going to be the global leader in telehealth, all right? I personally definitely believe that. Secondly, we can also see that the telehealth market is going to have a 38% a compound annual growth rate, okay, in the next 5 years. That's massive. And I think that Teladoc is definitely going to be able to benefit from this enormous growth rate. Now also, as we can see here, there is also a $250 billion total addressable market. $250 billion of current US healthcare spend could be virtualized. We're only talking about the United States over here, right? So this amount of money could actually be used in the telehealth industry. It could actually be virtualized. But hey, don't take my word for it, right? Because I'm just a random guy on the internet, so you don't really need to listen to what I have to say. So let's see what other professionals have to say about Teladoc and this merger. So I found a few recent articles on the Motley Fool, and these articles are written by 3 different professionals. So it's not just one person writing 3 different articles, okay? Let's just take a look at the first article. I'm just going to read some of these highlighted parts that I found important with regards to Teladoc's future. So basically what this person is saying is that Teladoc is making telemedicine the default for consumers. It's quickly becoming the go-to option for telehealth as doctors' offices and clinics were forced to close. The company aims to become a digital hub for both in-person and virtual healthcare, and this person also says that it's clear that Teladoc is prepared to disrupt the entire primary care industry. There are 2 major things here, in my opinion. First of all, the go-to option, right? We've already talked a little bit about this. Teladoc is and is definitely going to stay, in my opinion, the leader in telemedicine, in telehealth. The second thing that is very important here is that Teladoc is going to disrupt the industry. Now, personally, I love investing in disruptive technology. In that regard, I really like following the investing principles of ARK Invest. If you don't know this company just yet, then definitely take a look at their website, ARK Invest. Because what I'm looking for is I look for companies that are trying to change the world, that are trying to bring disruptive innovation into this world. Okay, let's take a quick look at the second article, which is going to be very brief. Here it says that Teladoc represents the future of personalized care. I don't think I need to add anything to that, to be very honest with you. And the last one says that's just one more addition as well. Teladoc's international growth has only just begun, which has given the company a long runway for growth. I don't think I need to add anything to that either. So what we're seeing here is that also other people, other professionals that know a lot about the health industry are quite bullish about this company in the long term. And again, short term, anything can happen, of course. Now, let me end with some practical information about the merger and about people holding Livongo shares. And let me also give you the bonus tip that I promised you, right? Okay, so first of all, as we can see over here, under the terms of the merger, Livongo shareholders will receive 0.5920x of the shares of Teladoc Health, plus cash of $11.33 for each Livongo share, including the special dividend declared by Livongo. Livongo common stock ceased trading prior to the open of trading today, which was actually the last Friday, right? So what happens is that you cannot trade Livongo anymore, okay? The problem is, though, I don't know when trading is going to be resumed. I suppose it's going to be somewhere early this week, but I've not been able to find any specific information about this. Now, honestly, Teladoc and Livongo should have been more clear about that when they were going to cease trading and when Livongo shares are going to be converted into Teladoc shares as well. And then secondly, the little bonus tip that I promised you at the beginning of this video, because I found this article on the interwebs about former Livongo executives. Let's just read this part, okay? Former Livongo executives who are not making the jump to acquire a Teladoc have quickly moved on to their next major healthcare venture. Former chairman Glenn Tullman and former president Jennifer Schneider are backing a blank check healthcare technology and are preparing an initial public offering of up to $500 million. This blank check company is going to be called Health Assurance Acquisition Corp., and they have not selected any business combination target, okay? So what does this mean? Well, basically that there is going to be a new SPAC on the block, a new special purpose acquisition corporation. So if you liked the team behind Livongo, if you liked these executives, then this could be something very interesting to keep your eyes on, like when this new SPAC is going to do their initial public offering. So if you like the team behind Livongo, then this could definitely be something very interesting to keep your eyes on when this new SPAC is going to do their IPO, right? Especially if you liked the company, if you liked these executives behind the company. All right, millennials, so there you go. So thanks to the merger, I definitely see Teladoc becoming one of the biggest companies in the health industry. Personally, I'm willing to hold my shares for at least 5 years to see where this is heading. So let me know in the comments, what do you think about Teladoc's future? I'd love to know that. Alright, thanks for watching, and I'll see you in the next one. Bye bye!